Good morning, everyone. Welcome to Admiral Markets. My name is Chris. We're going to be focusing on looking at the graphs and charts using technical analysis. Before we do that, though, before we take a look at the market, the financial markets, first of all, this warning explaining that the webinar is shown to a global audience but may not be suitable for everyone. Take a look at admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity to find out more about that and other details. Also, please be aware that trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. Plus, by continuing watching this webinar, you agree with this disclaimer and you're aware of the risk involved when trading. Good. Thank you so much for your attention. First of all, a quick look at the calendar. It's a bit of a busy week from a calendar point of view because we had statements from Australia. We've had seen statements from Japan, if everything went according to plan at least. And we will have one on the US FOMC on Wednesday. There will be pound interest rate on Thursday. So there's a lot of things that's going on. You can see here, that's where the Japan kicks in, the Aussie here, and we got Euro news and dollar news, retail sales. FOMC is tomorrow, as I already said. And we have also pound, as I said, and dollar core CPI and retail sales on Friday. So there's really a pretty decent list. There's also interest rate on the Swiss franc. So almost every country is talking. Yes, last week we of course had New Zealand and Euro dropping a bit to exactly zero, and Kiwi dropping a quarter to 2.25. So we'll talk about all that, what could be expected in a second. But this is something you have to be aware of. It's a week with a lot of news. All right, looking at the heat map, big movers of this week in terms of currency pairs, at least. Euro odd yesterday. Euro New Zealand, Euro CAD. To the upside, we had some yen pairs here. All right, so basically anything that is high or low means there's a lot of movement, a lot of trending, and anything that's to the left is low volatility, and to the right it's high volatility. So you can see that the dollar Swiss C, not much movement, not much volatility, and there are other pairs like that, like the Euro Swiss C and the New Zealand CAD. Bit of a slow move yesterday, not much happening. Pound number one again, Kiwi second. All right, you can find all of that at the admiralmarkets.com website, analytics, market heat map, where you'll find the traders blog too, fundamental technical wave analysis, which products are traded, which trading platforms you can use, the education side, how you start trading, all of that you can find here. This is the market sentiment, belongs to analytics as well. And a lot of longs on gold, a lot of longs on pound. Eurodollar seems to be a bit of a mixed bag. And at the moment, I'm actually exactly opposite. I'm more bullish on the Eurodollar, whereas people are more bearish. I'm actually bearish now on the pound, whereas people are more bullish. So that could be coincidence, but that's my market view. Yesterday on wave analysis, and I will pull up the charts and take a look at what's going on. Yesterday, in my video recap, if you had a chance to take a look, I was mentioning I'm bullish on Euro, Pound, and Odd USD, but the Pound USD has fallen further than I'm expected, and I think slowly but surely that's getting into a bearish zone. So Eurodollar still definitely stays in the bullish zone. Aussie is actually, I think, very close to an important level. Will it bounce here or not? And if it doesn't, then it's breaking to the downside. If it does, we might still get a bullish bounce. It's right at that zone I was talking about yesterday. So a lot of things to discuss. Let's first start with the euro dollar. All right. Good morning, Beverly. Good to see you and everyone else. Your dollar 4 hour chart, and I think it's a bullish uh, environment slightly. Obviously, when looking at a higher time frame, it's definitely a big consolidation zone, right? If you look at it from this point of view, this is just a clear range, obviously, after a clear momentum to the downside. So, from that point of view, when this box is finished, there's still a good chance we might move lower and continue with that bearish momentum, as we've said week in, week out. So break of double bottom would be such a confirmation. Now, that doesn't have to, of course, mean that no shorts are available until double bottom breaks. No, it's still possible that we can get some good shorts up in here in this orange zone, because look at the many attempts for price to push through it and the many failures as well. So it could be another failure up in here, and that could be a turning spot, and price could then maybe fall further than last time. All right, and start maybe the downtrend again. All I'm saying though is that this double bottom, that's kind of the confirmation moment that the consolidation box is really, really finished. Doesn't mean that that's the best or only shorting spot. Let's see. So from a fib point of view, price stopped at the 38.2 fib. If it manages somehow to get up to the 38.2 fib again, that would be a short potential. This orange box is a short potential. And even the 50 fib, all of these three levels are potential short zones to look for on a higher time frame. If it breaks above the 50 fib, well then basically something else is going on and price is not as bearish as I think it is, and I would be reanalyzing this and being cautious of the downside. Anything below the 50 fib is still very, very bearish territory on this weekly. If we move that in the weekly one, let me take a look at the weekly candle. By the way, you can see bullish weekly candle. So as we retrace last week's bullish candle, it could just be a retracement for that push up. All right. So this, looking at the candle formation on the Eurodollar, I would say a break of last week's high seems likely, and a failure to break last week's low, too. I don't think we'll break last week's low. I do think we'll break last week's high, and we'll just probably retrace this candle for one more upside. All right, looking at the daily, then we'll call this the master candle right here. And I think he, as far as I remember, wants the candle to be broken on candle 4, 3, 4, 5. I'm not 100% sure anymore. But in any case, it's only valid for a while, not forever. But at the moment, I think we can say it's master candle 400 pips, huge up day last week, huge move, bullish candle at that Eurodollar. So that's still dominating the scenes and is absolutely, undoubtedly bullish. So anything that retraces here should be just that, should just be a pullback for that one push up, at least. All right. We talked about the potential to bounce up already at various support levels here and here. Finally, it did so, and it got a double bottom down in here. So I would expect that to continue up into that orange zone. So obviously, this is not a trend. This is not at all a trending zone when you look at the daily chart. Far from it. It's also a range, but you can have zigzags within ranges. So just because it's a range on a daily chart doesn't mean the whole currency pair has to be skipped necessarily. Depends how you trade. In my view, how I trade, I think that this is still fine. 4 hour chart is not trending, but we do have the moving averages aligned. So I think that considering this triangle that we're seeing that is stopping at the 38.2 fib, it could be a bouncing spot. And the same could be the 50 and the 61.8. All of these could be bouncing spots. And the targets are right in here. 113.25, 114.50 at the minus 272 and the minus 61.8. All right, so that could be a zigzag occurring today. Hourly chart, you can see kind of the correction here. and basically price making a bit of bearish ABC zigzag. So looks like we're bouncing, price is bouncing as we speak, as we're taking a look at these charts. We can put a trend line like this and like this. And a break to the downside is not that tempting for me. There could be a small move down to the 50 fib, and that could be a bouncing spot. I'd rather wait for price to get down to the 50 fib than trading it to the downside. The alternative would be a break above resistance, above this triangle. All right. In that case, we don't really have a recent hit here. So let's see. Probably what I would prefer is I would like to see this hour candle finish in 3 minutes and see if we can reach the trend line. Maybe better would be even just to, let's take a look at the 4-hour chart. I think that, well, you see, there could be a pullback after it breaks. Probably that could be the best method of approach for this triangle. Let's see how if price can push with an hourly candle above this trend line. If it does, with a good close near the high, that makes a bit of retracement of that candle, then I think that could be a pullback within the breakout. That's, I think, my preferred choice for the trades today. Either if it gets to the 50 fib, look for a bounce, or look for a break, pullback, and continuation here via a 1-hour candle, strong candle close. A candle that is only a few pips off the high, has a decent size, and is pushing through this trend line. All right. Let's see, the oscillator here is awesome oscillator. You can find that when you go to Bill Williams, and then you click on awesome oscillator, and it shows you the momentum. It's like a MACD. It shows you the strength of price, basically price, or the lack of strength if there's divergence. So when basically this is above zero and growing, you got bullish momentum. If it's below zero and growing, you might have some bearish momentum. But it also depends how far it goes. Obviously, you can see that this is quite shallow compared to this move up. So this has a lot of momentum here. Pushes quite strongly. You can compare that to previous moves. You can see that. Once 3 bars are in the opposite direction, there's a higher chance of the momentum, the swing high, swing low being completed. And that basically we're in a retracement mode. So as this crawls back down, right, that's kind of the retracement area. Still a bullish environment because, well, first of all, the bars are definitely above zero, but there's a bit of a bearish retracement there. All right, the moment it changes, it doesn't necessarily mean it's right away bearish. It could be a stronger retracement, but it could be a reversal too. That's basically depends on the entire context of the chart, and it's not a rule of thumb always. You can see that prices here the oscillator is just going back up and down, and there's really no trend. It's just quite shallow. So that's more of a range, which indeed corresponds to what we see here, right? But here we can see it nicely pushing up. So there was a momentum there, a bit of momentum. Might be good to watch one of our webinars on that as well. You can find that on YouTube. Adam Marcus has our own YouTube channel with lots of videos, recordings, etc. Alrighty, so Eurodollar did close bullish, so let's see if we get this hour a candle pushing through that trend line. Pound is a bit different. I was bullish yesterday, but the factor for me important was a bounce at these tops. It didn't do that. There was also no sign that it would bounce. I always wait, or in many cases, I'm waiting for a reaction to a support and resistance level. Yes, for me, that was an interesting support level where I have the green lines. Definitely. But if it doesn't bounce and there's no candlestick pattern showing that to me, then it's not bouncing. So I was still counting on one more push up before a turn back down. And that had to do a bit with wave analysis because I was thinking that this could be a 1, 2, 3, 4, 5, right? 4 should not go back into 1, which means that this particular top was very important. Well, price broke through that and basically just kept pushing lower and lower. For me, once again, this top was key. All right, so I needed price to break above these fractals for breakout and not push below the green line, and it did right here. So once that happened, I know that something else is going on, and my view is definitely neutral at that point, right? Because that's my validation level. That's the spot on the chart where I say, hey, something else is going on than I expected, so I'm not going to trade the same way, or not going to look for trades the same way as I did before that moment. Nothing lost, at least in my case, because I didn't see any break or bounce. Now, as these 4-hour candles keep pushing lower and lower, we're actually testing the bottom of this channel. Just because price went through my invalidation point doesn't mean that it doesn't have to be right away bearish. It could still be a retracement of some sorts. We find support at a lower spot, like this trend channel, and still make a rally and go up to the next target, for instance, right? At this minus 61.8, possible. So price is right at the bottom of this channel, but if it breaks that bottom, of course things are starting to look more bearish as price starts to push lower and lower. So this channel is not great. There's a bit of a wick below it here, but I think still serves well as a rough indication. Let's take a look at the hourly chart. All right, so the question is this a correction and we'll see basically a bounce, or we'll see a trend change? Now, I don't think that this is a very good moment necessarily to go short because the moving averages are squeezed like this. Makes it a bit volatile spot, I think, from my point of view. We don't have any pound news, but still, even though it could be bearish, you could still see a bit of retracement before price makes a bigger downside. And in the other case, it could be a bigger bounce and perhaps still the upside, as I was talking about. So from my point of view, it's not a great moment to go short. Now, is it a great moment to go long? No, because it went through my invalidation spot. But it could be a long if price manages to get, let's say, above this green line yet again. All right, shows some momentum and makes a small bull flag on a 50-minute chart, for instance, and then breaks. That could still be reason to go long. If price makes a bit of a bear flag like this and then starts breaking it, that could be a good moment to go short, in my opinion. So for me, it's a waiting spot on the pound, at least, pound USD. I would like to see price build some kind of structure, either a bear flag or a bullish momentum followed by a bull flag, to give the swing the odds there a bit in my favor, because I think that either way, there's really not a significant edge to trade at this point. Now let me add some moving averages here. And you can see that we were in a big downtrend, of course, and price has been using the 21 EMA very nicely all the way here. Actually, quite a strong move up using the 21 EMA. Here it was using it to the downside. With the green arrow, it was using the 21 EMA band to the upside. Now it's trying to break through it, all right, but it could end up just like it did here with a wick, and here 2 wicks. So I think it's still too early to tell. Also, in the meantime, price is above the long-term moving average. So I would like to see a couple of things: either a bear flag and continue, or either a push lower and then a hook back and continue, and I'll be trying to trade the hook back. And then we'll see the 21 EMA turn like this, right? Like that. And then the hook back will be contained most likely by that 21 EMA. So I think it's too early to look for shorts. I really want to see something like this occur before I think that is a good setup. Now, if it does move higher, by any chance, if it does get up to the 78.6 fib, I still think that's a good shorting zone at 145 as well. Let's say it makes a bit of a bounce here and does like that. Right here could be an interesting long, but this could also be an interesting short right here at 145. Because at that fib, the 78.6 fib, could still be a very strong resistance spot. That could be, a introduction to a pretty substantial downside, perhaps. So I think that is definitely an interesting shorting zone. Otherwise, I don't think I have much to say on this. Let me just double check something. So far, price is trying to pull away from the 21 EMA, but it really hasn't done so. So it's still within a resistance zone around that 21 EMA on the daily chart. And basically, we've got a fib. The fib I drew is basically a fib on this monthly candle. And all what this upside could be is a retracement of last month's bearish candle. So that's something we got to keep in mind as well. All right, that's it from my point of view. If you have any questions, of course, by all means, feel free to let me know. Dollar yen has a bottom that was broken a while ago, and basically that has become resistance. All right, so we have a triangle that is being built below that resistance spot. And if the triangle therefore breaks to the upside, I would expect that orange resistance zone and these fibs to still be a very difficult spot for price to break through. Actually, I would expect a bearish turn and the respect for that level. So in break of that triangle to the upside is not interesting, but a turnaround at these fibs is. The alternative could be a break of the triangle to the downside, and that could definitely be interesting in my view because we had momentum here, a break of the big bottom, and a triangle indicate that a break to the downside would be a continuation of that momentum and the trend. So we had a bit of a turnaround just a few hours ago. Right here you can see at the resistance. All right, and basically price not able to break through those levels and turning around, now retesting this support level. This trend line right in here. All right, so on a 4-hour chart, this is how the trend line would look like. And I think that, a 4-hour candle, just like with the hourly on the Eurodollar, but here a 4-hour, I would say. A candle like that, with a bit of retracement of that candle, followed by continuation, I think would be an interesting breakout on this time frame. Now, an hourly might work well too, an hourly candle like this. But then I would probably put a fib from here to here. I would not look for only a retracement of that candle. Wherever that candle ends, let's say there's a candle like this, I would probably look for retracement up to the 38 or 50 fib before looking for a follow through to that downside. So kind of a break, pullback, continue. Of course, I place the fib here, but it really depends where the candle obviously ends. If it closes there, I move the fib to the close of that candle, to the low of that candle, after it closes. So it doesn't make sense to draw that fib obviously now. I'm just giving you an example. It doesn't make sense to draw it now because this is a future fib, and we don't know where that exactly will be, but just to give you an idea. Alrighty. How far could this price move? Well, definitely to retest this bottom, I would say. But if it follows this fib and breaks that bottom, it can go even to 108, which is the minus 272 target. And it could have this space to fall. Right there and right there. If I add the moving averages, again, just quickly, you can see that everything is bearishly aligned. Short, below, long. 8 EMA turned with that bearish candle. You see that? Like that. And this was already attempt number 1. This could be attempt number 2. Attempt number 2 is always a bit better to break through the 21 EMA. Not a guarantee necessarily, right? Because look at here, right? Still had one more pullback, and the third one actually decided to push a bit further down, right? Not that great, but a bit. So never a guarantee. Nothing is in trading, but this seems to be, when you look at the moving averages, this seems to be a better breakout than this candle itself could already be it, in fact. So let's see if how this closes. We had a trend line on in the previous chart that was like this. So, a bit of a pullback and break that could happen. There could be multiple ways to trade it. A bounce, this could be already worth it. And then you get a break and you get another pullback, and it could be another way to enter the trade. If that happens, something like this could happen. There could be multiple pullbacks at the trend line and after the trend line break. If I trade the pullback before the trend line breaks, that means that price would probably do like this. I might consider it. I would like to take a look at this hourly, see if it makes some kind of bear flag, and if it respects the 21 EMA band, and shows a pattern here, I might take that. Now, I'm not going to go long because basically we're in a bearish environment. Moving averages are bearishly aligned. For me, that is not a reason to go long. This is a downtrend. It has been recently ranging, that's true, but also the daily chart clearly below the important support level here that's now resistance, clearly showing a range with after an impulse to the downside. So for me, definitely not a area where I want to go long, without any doubt. Might work out, but this is not for me. And it's good to know which trades are definitely not for you, which trades are interesting for you, just like I do now. Because trying to chase everything is not good, right? Because it just gets confusing, and often enough, if you trade too much and try to chase too many setups, then most of the time you end up with too little confidence in the setups you have. Because in that case, basically, you're just trading something that you think might be good, but there is not that level of confidence, engagement that will probably be enough to stick through and hang out the ride, the market ride. You have ups and downs. Price is always, of course, trying to retrace and continue and pull back. And most of the time, this just is too scary for traders to survive if they're taking setups that are iffy-ish, if you know what I mean. Not or maybe setups. Let me say it this way. So pound yen. All right, made one more push up and fighting against this tunnel, as I call it, poking through it a bit, and that can happen. And now we're tracing back lower. So definitely looking now again bearish. We had already a downtrend prior to that. A sturdy retracement, certainly so. But there was divergence between these tops, right? So that's a signal that the upside might be over. All right. Also, of course, we reached the long-term moving average. So another reason why price might be back into a reversal sign. Now, from a daily chart, this upside is a bit difficult because technically, all right, you might say there's divergence between these bottoms. But here, the oscillator just missed the zero line. Officially, it's not divergence, but because it was so close, one could definitely be a bit cautious and doubtful because of that. If it were divergence, the target would actually be the daily long-term moving average all the way up here, which means that this upside is just but one leg, and we can get one more leg to the upside, bring it way, way, way higher before that could be probably again a resistance zone. So whether this is divergence or not, it's potentially possible, technically not, but because it's such a slight difference, I would still be cautious with that and keep it in mind. Now, if we look at this move up, we do see 5 waves, and that's another reason why we might want to be careful. And that bigger retracement could occur. You see wave 4 not going into the wave 1. Is wave 3 the biggest? 630 pips. Certainly beats wave 1 and wave 5. Well, that makes a lot of sense, right? Which fib did wave 3 use? When we put it on from here to here? Well, roughly the 50 fib. Bit deeper than usual, but still within the margin of acceptable and possible. And the price went to, let's take a look, went to the minus 272 target, right? Just like the Eurodollar did too, by the way. Anyone who had the fib from here to here saw price going right smack up to the minus 61.8 target. Now, the bottom was challenged very severely, and I didn't expect such a deep retracement. I didn't expect double bottom, and that was a bit news triggered. But the bottom didn't get broken by 15 pips, which means it's the double bottom, and ultimately price going up all the way to the minus 61.8 target. So if you have any questions about those targets, you can see how nicely they work and how the market responds to those Fibonacci targets. Here, a beautiful hit on the minus 272 target. And if you put a fib on here, you'll see a reversal go up to the minus 1,000 nicely, respecting the minus 61 and the minus 272, but still pushing higher and higher. So those targets work very, very nicely. And here also a 61.8 bounce. So you can see from a fib point of view, it's very harmonic. It's very in rhythm. It's almost like a communication. It's a language on its own almost. It's quite beautiful to see, I think. So you got 5 waves, but you had the classical divergence between wave 3 and 5. All right. So from that point of view, I don't think there's anything wrong with putting a fib from here to here. If this is a 5 wave to complete an A, and this could be a B for a bigger C because of that divergence on the daily chart, then the wave B could end up at any of these fibs, but most likely, I would say, at probably any of these 4. Now, I don't think it's a done deal like that because technically daily doesn't have it. So what could happen is that although this could definitely be read as a 5 wave, I wouldn't say that that's the only factor that should be considered. It could turn out to be some ABC correction, for instance, like that, and yeah, I wouldn't say that that's the only factor to consider. So because we are getting a breakout here, I would still think that a pullback is a good short for a downside. The only thing I want to say is that we should not be ignoring the potential for a bounce down in here. So when I'm taking a short upon the pullback here up to the 21 EMA, and I take a short when I see some confirmation that price is turning back here, I think that's fine in my view, but I do want to be cautious with when price gets lower because I know that this could be a potential bouncing spot, and I don't want to basically aim for a target that's all the way, who knows, down in here. And I don't want to ignore the fact that there could be a bigger bounce potential like that. Does it happen? I don't know. I just don't want to be naive and say that it couldn't. There are some factors that say it can. There are some reasons why it just can continue. At this moment, from my point of view, both are just as possible. So that's why I want to be a bit cautious when taking shorts with the take profit. So one way of doing that is putting a fib from here to here. The other way would be to put fib from here to here, wherever it stops, wherever it makes a pullback, probably the 38.2 fib, right? That's close at 160.50. Doesn't have to be there, but it could be, right? So a bounce there could see price go back to these fibs and then turn back down to this confluence here, or this confluence, or even this one. We don't know how far it can push. It could even go beyond that, but these blue zones are potential bouncing spots, and I think decent take profits as well. Now looking at this momentum, who knows? It might get to the 50 fib right away before it makes a bit of a bounce. Alrighty, that's I think my view. You can see price really accelerating on this hourly. Not only going back to the 21 EMA, but then breaking below it, going back to the 144, then breaking below the 144. And I think that there's probably a bit more space down to the 38.2 fib, and we'll probably see a retracement back to these moving averages, which could definitely be a resistance spot for a bearish bounce back down. Another way of looking at it is this candle, right? If this candle is bearish like that, this fib might be a bit too big because it could only retrace that candle. So maybe a bit of a tighter fib is better. All right, let me just see which fib is the best. Alrighty. Maybe even this fib is enough, to be honest. Like this. Yeah, probably using this one could be enough. I used all the way from the top, but if this 4-hour candle closes anything like this, that might be a bit too wide. All right, maybe this is more realistic. And a retracement up to the 50, 38.2 fib, like that, I think is pretty probable. Alrighty. Euro yen could look very similar to the pound yen, but I think that the euro is showing more potential for upside, whereas the pound is showing more potential for downside. So I think pound yen downside makes more sense than euro yen. And the dollar yen also makes more downside sense than the euro yen. So I think that the euro yen is therefore not a good one necessarily. I would skip that one. Dollar yen, pound yen downside look better, and euro yen is something I would skip. From Eurodollar, as I said once again, for those that maybe came a bit later, I think that a triangle break to the upside is good for potential longs, or a move down to the 50 fib, which could be a bullish bounce spot. Whereas pound, I think, has more potential for either a correction and continuation, or break, pullback, continue, or if it somehow manages to get all the way up here, makes a bull flag, continues, but that does not seem very likely. All right, odd USD is at a bouncing spot. We got clear trend line. We have basically tops in here that could act as support levels. All right, price is slowly but surely marching lower. Technically, there's not divergence. This is 1-hour divergence, all right? Because the oscillator didn't go back to the zero line. Here it did. But actually, this is, on the hourly chart, pretty strong reading. Let's put a line right on the oscillator. Slight divergence, but not as much as we expected. Anyhow, price did get back to the long-term moving average. And that is the target if there is that divergence. So price has reached the target of that reversal trade, of that reversal move. And it could be back at support. So this is a bouncer break spot simply. If it bounces, we might see a rally above like this. If it continues or breaks the green line, we might see a retracement down to the next support level, which is the darker green lines there at the bottom. I think that probably a 4-hour chart is the best for a break to the downside. If it pushes a candle like this through it, that would be, I think, an okay sign. But I wouldn't look for lower time frames, not for a downside break, because the trend is up. If it's breaking, however, to the upside or bouncing to the upside, an hourly could be enough. All right, let's see. Probably would like to see price break above these fractals like this, show some engulfing twins, some kind of reaction, some price action signal that it basically showing that this downside, this correction is over. That could be now, could be a bit lower too. Maybe we can still get a couple of bearish candles before we get a bullish bounce. So I think that a reversal here back into the uptrend is makes a lot of sense for today. If it doesn't happen, then I'll keep track of this 4-hour chart. If it breaks through the light green line with a strong 4-hour candle through it, then the bullishness is certainly off the table from my point of view. Kiwi looks quite corrective. I think we can skip that for the moment. Dollar CAD has multiple divergence, and well, maybe this time it will make a retracement. Here we had retracements or pullbacks, but not retracements. Maybe now we'll get a bigger push up, but I'm a bit leery, a bit cautious with this CAD. So far, the divergence has not played out. Maybe now finally it does, and it heads back to the long-term moving averages, but I'm not really that interested in it. Alrighty. Pound has a strong candle here. One candle just pushing right through it. Makes it a bit strange structure at the moment. Prices are going sideways. Downtrend is clear. But the divergence could mean the price gets back to the long-term moving average. So from that point of view, I don't think it's a great pair at this moment. It would have to, at the minimum, show its potential to move lower by breaking probably these bottoms in here, or breaking maybe above the resistance to show that it has a chance of going there. Right? I don't see at this moment anything else. It doesn't look that great. But if it shows a good 4-hour candle like this, poking through it, there might be a hook back and continue, and vice versa. Not that doesn't look that great because the pound is looking weak. I don't think the upside is that great. Maybe the downside would be a bit better. Euro odd could be the other way around, right? The euro looks a bit stronger, so this candle too is stronger than the pound odd. And here we could have a zigzag just like the euro dollar. To me, the euro dollar looks a bit better. Alrighty. Does anyone have a particular pair they would like to look at? Any preferences? A pair or a time frame? A setup you are in or want to get in? I can take a look and give my 2 cents. Dollar CAD, sure. We just looked at it, of course, and I said that there's a good chance of reversal, and that I wasn't interested in trading that reversal because it tried several times and failed. There's definitely divergence on the 4-hour chart. On the daily chart, we got the price basically hitting these long-term moving averages, right? And kind of poking through it, but could still be a bouncing spot for upside. No problem, Naeem. We can go through it. I didn't really talk about it that long anyhow. So weekly chart, we have price trying to go through that 21 EMA band for the first time. And often enough, that's just a retracement, or if it does reverse, it's only the first attempt often enough, right? I mean, sometimes you do see it break right through and rush lower, and it sometimes happens, but often enough, you quite often get this. That's just a retracement. All right, would that be here too? I don't know. It could be still a retracement. Or you often also then, if it is a reversal, get something like this. So from that point of view, yes, price has been moving significantly lower, but it hasn't reached a spot where it could bounce back up. I think that's a pretty decent likelihood when I look at the daily, the weekly, and the 4-hour chart. So if I had to choose any side, I'm thinking there's going to be a retracement to the upside here. Now, how I would trade it, I'm not sure, because I'm not sure if I'm really at all interested in it personally, because I tried to trade it once to the upside here, and have been that was a loss, or it didn't work out. I don't remember exactly. It was a while back, but after that, it just kept pushing, and I would just be even more cautious with this one. But this could be finally the moment that it reverses. That's just one of the nasty things with reversals. You never know sometimes how long it takes. And maybe the only way I would like to trade it, you can see looking at this hourly chart, how well respected this 144 EMA is. We had a couple of tests, right? Those were retracements. All of those really didn't see any significant break, except maybe here, but ultimately failure there too. So if anything, I would like to see probably an hourly break. I would like to see price basically show a couple of candles like this above it. I would like to see the 21 EMA go like this. I would like to see price then hook back to it, making a bull flag and bounce off that 21 EMA. That particular sequence might make me interested in dollar CAD finally trading it again to the upside in anticipation of that bigger bounce back up. And how far that bounce can go up? Well, it could be an uptrend continuation, or it could just be a simple retracement for further downside. So a conservative target would be, for instance, a 50 fib back to 139.25. So yeah, I would like to see a couple of candles like that, pull back and continue. Alrighty, we got some crosses mentioned. Let's see, New Zealand yen. There we go. Alrighty, we've got two trend lines on it. And the resistance trend line being respected again. 4-hour chart is quite choppy. The daily chart is certainly bearishly aligned. All moving averages are bearish. And I think it's waiting for a break to the downside here. but I'm not sure if it's really that great at the moment to trade. I don't see any particular setup at this point in time. I would probably have to see price pull away from those moving averages a bit. And I would like to see a gap between these moving averages on the 4-hour chart. But if you're trading, if someone's trading the daily, might be a bit different. I don't know. Maybe if this daily candle indeed closes bearish today with a close near the low, tomorrow maybe you look for a bit of a pullback on that daily candle. Could be worth already a position trade right there, but that's a daily chart, so that would translate maybe in a 4-hour chart, something like this, which might make sense too, if you get something like that. Those are the moving averages. That might make sense. Could be interesting, but it seems like it still needs some work to be done. Let's see, odd yen, no, pound Swissie, or odd yen too, okay. Let's see. Price hit the tunnel on the daily. Let's see, is above the 21 EMA and could be at a bouncing spot. Divergence on the 4-hour chart. So this looks like it could reverse back indeed. We talked about the zigzag here, pushing up quite high, in fact. Let's see. It looks like it's trying to break below the 21 EMA. It looks like it wasn't a good spot for downside. It's now trying to break below the 21 EMA though, so that's always a bit risky spot at this moment because it can make a pullback before falling. But I think there's also a good chance of a head and shoulders. If it makes the next pullback, I think it could be an interesting reversal trade for a down move there. Today's candle, for instance, if it's bearish and tomorrow it makes a retracement of that bearish candle, I wouldn't be surprised if it finds resistance. So definitely want to keep an eye on it. Not something to trade maybe right now because we're going back to the 21 EMA, but could be good to keep an eye on. Pound Swissie, just like the other pound pairs, basically prices retrace pretty high, gone far back, and basically price is making a bit of a head and shoulders. This could be the neckline right here. Good resistance trend line. It seems similar to the pound USD. Price has gone back to the long-term moving averages, and that could be a turning spot for a move down. So I think it's quite similar to that. From that point of view, I probably wouldn't be a fan of the pound Swissie. I'm not a fan of the Swissie. That's why, but it seems very similar to me as the pound yen too. Same thing. Is this a 5-wave or not? So the same question, is this divergence? Well, actually on the pound Swissie, it does actually seem to be so because it went back to the zero line, you see. So from that point of view, this could be the target. So got to be careful when price gets down into here because it could be a bigger zigzag. So it could be a good short, as it breaks, pull back and continue, but be careful of a bigger bounce down in here. The same thing basically as with the pound yen. Now the pound dollar I don't think has that. Let me take a look. Oh, it actually does. I missed that fact in the pound USD, so it's good we double check. Actually, it does have divergence, and it did go back to the zero line, and it hasn't gone back all the way to the long term. So it could be the same zigzag potentially there as on the other pound. So although I'm bearish now at this moment, right, for downside, we got to be careful of a potential bigger bounce right there. Alrighty. So that's something that pound is could be a bit cautious. Yes, it looks bearish to me, but I failed to see the daily actually one. I thought that would be a pretty good downtrend continuation. But if it is divergence, it could be a warning sign that we might get a bigger ABC zigzag on the pound USD too. Doesn't have to be, but something certainly to be aware of and cautious of, especially if it starts making a bull flag like this, right? Especially if it starts corrective like that. That could be an extra signal, an extra confirmation that price might make a bigger upside. All right. Let's take a look at some indices indeed. Will not hurt to take a look at a wider view of things. DAX making a bit of a bounce. Not able to break through the long-term moving average, as you can see, but getting squeezed in between both. Bit of a tough spot there, and I think that there could be a lot of things that could happen. I wouldn't want to make any decision on this, but it looks like it's going back into resistance, but it could be caught in between and just go sideways like that. I wouldn't be surprised. Difficult to say at this moment. It's really getting squeezed, and if it gets squeezed like that, there could be a pop out of that zone into both directions, but I wouldn't expect it to move too far away from those moving averages. I think that the moving averages will act as a as a how do you call it, a gravital pull. So it will be basically draw itself back to those moving averages. There's a good chance of that, I think. All right, oil has divergence between these bottoms, so we could see maybe a bit of ABC zigzag to the upside, which means that we actually are having it on the daily chart, perhaps even on the weekly chart we could see that. And this could be maybe a bit of a rally up to retest this top. Difficult to say. We only have, at this moment, I would say 1, 2, 3. That bigger ABC zigzag becomes more likely if we get one more push up like this without breaking through this top. So if price respects the 38.2 fib, it goes up to the minus 272 target, then I think that there's a bigger chance of this up move. So let's see. Otherwise, this could just be an ABC zigzag, and if it breaks below the 38.2 fib, then it could just be a retracement for more downside. All right, gold didn't make it up too high, as you can see before. It's kind of failing still. Big momentum, so I think that this could just be a retracement down to the 38.2 fib, which still remains a bouncing spot. Silver, still weakish, still looking very consolidation, not that interesting. S&P making a bigger rally than DAX, going all the way up to close to the 78.6 fib, but still, as it gets higher, I think I cannot see. I mean, I cannot uh, picture this chart without any heavy resistance there. Let me say it this way. So uh, I think that some bounce back down seems pretty likely. Now, of course, if it breaks through these tops, which I don't necessarily expect straight away, it could happen after a retracement down, right? But I don't think that will happen in one shot. Finally, the FTSE is also making a rally a bit up, but just as the DAX, a bit on the lighter side compared to the S&P at least. Quite messy, to be honest, if you look at the last few months. Let's see. I don't really like this chart, to be honest. I mean, it has a lot of wicks here, so it could be, of course, a reason to bounce and retest these resistances up here. Did you have anything in specific, Beverly, that you were looking at? Uh, I'm not sure. Maybe you were studying this chart a bit longer than me, so it could be a bit more useful for me to find out if you have any specific idea, perhaps. We do maybe have a trendline break like this. And it could be a reason for a bit of a rally to retest these tops in here. So let's see if everybody has any specific plan for that. But otherwise, dollar index still bouncing about. Really nothing interesting there. All right, those are a bit of the instruments that we can sometimes look at. New Zealand could be interesting, by the way, if I can find it. Hang on, there's a lot of small ones here. There we go. New Zealand could be interesting because it's actually on a monthly trying to build a head and shoulders. I think we talked about that inverted head and shoulders right there. Now it already broke above this trend line like that, and it's with a good weekly candle above it. Now from a monthly point of view, it depends on how you draw it. It could still be at that resistance spot, but it looks like the odd is going to regain a bit of that territory it lost in all those years. And we did have a 5-wave here. It looks like that has been completed, and we could be building an ABC zigzag. We had on the weekly chart pretty good momentum here. We had divergence between these bottoms, so there could be a bigger ABC zigzag. And I think that this could be the C part that could bring us up to the -272 target. Now, in terms of trading, the daily chart is nicely pulling away from the 21 EMA. I think if it, I would like to see a bit of a pullback like this. I'm not sure if it has to go back to the 21 EMA exactly, but a bit of a pullback would be pleasant here. Let's take a look at the 4-hour chart. Maybe the ABC zigzag would be pleasant. Like this. If it gets back to the -272 target or the -61.8, it could be a good retracement for a continuation upwards, I would say. Bit of a zigzag. Now, it might not happen, by the way. But if it does, I think that would be an interesting potential there for a retracement and a continuation up. All right, stop loss could be below this strong daily candle. Obviously, this is a very dominant candle. The low of that candle, I think, would be a good stop loss placement point. Now, how about if it doesn't? If it doesn't, and it rides this 21 EMA higher, I still think a pullback is probably better because this could just kind of ride a bit very correctively. I think waiting for some type of pullback that could at least bring price back to the 21 EMA eventually, I think makes sense. It doesn't have to be necessarily that deep. If it does push up here and it respects the target, for instance, right, and then starts to retrace back down and it starts to make a bull flag like that, and then breaks that bull flag, I still think it's a good long as well. Okay. All right. So that's my view on New Zealand. Eddie, oh yeah, Beverly wrote back. Let's see. No, was just interested in my thoughts. I've been cautious and stayed away, and but Beverly says that there could be maybe some opportunities there to get back in the uptrend, and yeah, makes sense to take a look indeed. But I don't know. They don't look too, from my point of view, not that great of a position as yet. I can see maybe some space on DAX and FTSE because they just haven't moved up as much as the others, but I still see them quite trapped. All right. But let's see. We'll definitely keep an eye on it. This week could be an interesting week as well from a news point of view. So who knows how that loosens up the market or what kind of movements we see due to that. Alrighty. That, I think, wraps up today's webinar. Take a look at the webinar schedule. We got more webinars tomorrow, or tonight actually. Now let's take a look at MT4 Super Edition tonight. Tomorrow, we got the strategy webinar. I'm not sure why it's not visible here. That's a bit strange. All right, I gotta sort that out. It should be visible. 15. 16th. I'm not sure what happened with that webinar. That's weird. All right. Well, there is a webinar tomorrow. Don't worry. I've just it's somehow missing in the schedule, so I'll fix that right after this webinar. So hope to see you then. I guess that there'll be a bit less time to sign up, but if you check back maybe in let's say 4 hours from now or so, or even at the end of the day, it should be there. All right. So I hope to see you tomorrow. Thursday, we got methods for trading the market on moving averages. And Nennet and I will be talking together, in fact, because Nennet will be visiting me. So instead of us talking from two different PCs, two different locations, we'll be actually talking right beside each other. So, all right. Wish you all great trading and talk to you soon. Cheers.